Hello and welcome to a new video on the HKCM Global channel. My name is Philip. Today I will be taking a look at the NASDAQ index. If you haven't done so, please subscribe to the channel, leave a comment, leave a like. Everything helps to promote our content. The NASDAQ, we are still in a major tech rally. We have been so for the last 2 years basically, and we are still not really showing signs of major weakness. Since the lows in spring, around April, May, the market has pulled back. It has pulled back up to new all-time highs, and currently we are still also basically trading too close to all-time highs at the moment. So let's take a look at the overall long-term perspective, where basically nothing has changed over the last few weeks. I'm still expecting the NASDAQ to be running into a major cycle high in the near future. Currently, my expectations are that we still have space left until 25,357 to 29,700 points here approximately. And from there, I'm expecting a large and also a very timely correction in the markets. Either we take the exit around 18 to 15,000, or we're going to go all the way down here, and we have to expect basically the index to be cut in half and even more than half. So 12,000 to 5,000 points would be possible, although the lower end of the spectrum here I deem to be very unlikely at the moment. Nevertheless, I think the stakes are rising day by day, because the market has been stretched to such an extent here over the past years. The correction that we saw in the spring didn't really help much. Short-term relief, everything was bought back by the market players, and we are now back at all-time highs and are pushing to even further new all-time highs at the moment. So the question is, what can happen in the short term? I had to change my short-term scenario, because I was already expecting around June for a possible top here. We took up some short hedges against our long positions from the lows that we entered long positions down here around April. So we are still trading in our long positions at the moment. I'm right now expecting a consolidation within the next few weeks, which I also have already defined a target zone down here, another buying opportunity, which is then probably also going to be the final buying opportunity in this rally in terms of reaching this overall target box up here that I've shown. Now it's just a question, are we completing this correction basically in a sideways pattern, or are we going to go a little deeper here again? We can still be within this B wave as long as we stay below 24,527 points. This is going to be the level. If we break out above here, I have to consider the correction to be over, and we will be pulling directly towards this box up here, which is also not very far away, to be honest. If we look at the percentages here from the levels we are currently trading at, this is not much to go to the upside, so around about 5 to 10% at the moment. So this is not really the huge step for the market, but we have to expect that this can also be taken in a direct fashion if we go above 24,527. But at the moment, I'm still expecting this consolidation to continue for a little while, and then we're going to be seeing some lows down here in this area around the 20,694 level. I will take up more longs here, and just to trade the final leg to the upside. I'm not expecting the market to crash below this box that I've put on the chart here down here. So I'm expecting at least to be a bounce, even if it should turn out that maybe we have already seen then a major top, which I can currently not define yet. Let's take a look at the indicator chart here as well. Short term, we are showing signs of being overbought on the 4 hours. So in the next 1 or 2 days, I'm expecting a little downside to unfold here. At least could be then basically returning us into the sell-off that started back here on July 31st. 8-hour, similar picture, also closing in on the overbought levels here as well. The daily had already crossed down, is trying to recover, go back up, but we also, we're basically on very high levels overall here as well. We are not in positive momentum at the moment on the daily chart. Really interesting it gets when we zoom out and we go onto the 4-day charts. 4-day MACD still trying to cross to the downside. We are still continuing to lose momentum. We have been doing so since July 25th. So it's a continued downtrend in terms of the positive momentum. Also showing clear signs that we are closing in on a major high here. Same goes for the weekly chart as well. We haven't crossed on the MACD, but we have been losing positive momentum over the last 4 weeks as well here. 2 week, we are still pretty much in the green. Yeah, we are still building up positive momentum candles here at the moment. So still suggesting that in the long run here that there's still more room to the upside. And also the monthly looks still healthy at the moment. We had that break to the downside in spring before the lows in April. After that, the MACD was able to cross up again, and now we have been over the last 2 months with the rally, we've been able to also build up positive momentum again, although it's not come up to the levels that we've seen here before. So we are still in the green zone here at the moment on those really long-term time frames. They do take time, and they do take more price action to trigger signals here to the downside, but we can still be expecting new highs. So I'm very confident at the moment that if this scenario plays out the way I'm expecting, so we're going to get some more corrective action over the next few weeks. Basically from now on, this would be around another 10 to 15% sell-off, which I think would be very healthy for the market. And from there, we could take it one last step to the upside. But then probably by year's end, we still have to be expecting that a major correction will take place, and it's not going to be over within a few weeks then. It's also going to be very interesting if now in September there will be the first rate cuts by the Fed, how the markets react to those. Usually in the past, all rate cuts have always been basically taken up by the market, not with a positive signal, but with a negative signal, and they have triggered off sell-offs in the past. Because let's not forget, if we look at the jobs numbers that came out last week, it's not all looking that healthy, and nobody is lowering interest rates because things are going that well. So just keep that in mind here. If you haven't done so, get a paid subscription on our website, hkcmglobal.com, if you want to know how things continue, and if you also want to see the target areas, get your subscription there, and see you next time. Thanks for watching.